The S&P 500 just set a bull trap. What is it telling us now? In this video, we will review the S&P 500 along with other major market indexes, market sentiment, market internals, interest rate, the US dollar, oil, silver, and the gold market, and see where the S&P 500 and the rest of the market are headed. Stay tuned. Welcome to another S&P 500 analysis. Today is November 27, 2021. In my last week's video, I said that we could see a new all-time high from the S&P 500, and that could set up a bull trap to trap the dip buyers. Last Monday, we saw the S&P 500 made a new all-time high. Then we saw a huge 3.5-hour sell-off on Friday. On this weekly chart of the S&P 500, the S&P 500 lost 94.68 points, or just a little bit over 2%, and it had a weekly range of 158 points. It had a failed inside coil breakout and broke the weekly one-time framing up. The weekly close still above this ascending 10-week moving average and also this 40-week moving average, and it is still inside of this price channel. On this daily S&P 500 chart with the VIX and the put-call ratio, we see the S&P 500 was down more than 106 points on Friday, or 2.27%. The VIX moved into this 20-30 zone and closed the week sitting at 28.62. The put-call ratio was still under this 0.75 and closed the week at 0.57. With the news of the new COVID-19 variant from South Africa, market participants are being a bit more fearful, but are not putting on hedges yet. The up-down volume ratio is showing heavy selling on Friday, with a ratio of 9-to-1 in favor of the down volume. And the daily events also show a broad market decline on Friday, with 2,389 more declining issues than advancing issues. And the New York Stock Exchange new low also outnumbered the new high by 189 more new low on Friday than new high. The key takeaway from this chart is the number of new low is actually expanding. And the NYSE cumulative AD line continued to show major internal weakness. And for the NASDAQ market, it lost more than 547 points, or 3.31% for the week. On Friday, it lost more than 342 points, or a little bit over 2%. The up-down volume ratio was 2.4-to-1 in favor of the down volume, and there were 2,716 more declining issues than advancing issues. And the new low in the NASDAQ market not only is expanding, but also the new high is contracting. And that results in 313 more new 52-week low than 52-week high on Friday. And the NASDAQ cumulative AD line made a new low on Friday, and it is showing more internal weakness than what the NASDAQ 100 index is indicating. Now let's take a more detailed look at the S&P 500 and the other indexes. The S&P 500 made a new all-time high on Monday and got close to this 141 extension near the 4746 level. Then it backed off and backtested the 127 area near the 4677. Then on Friday it sold off and got underneath it. So for next week, if it continues to move down, then we'd be watching for it to come down to this pivot high here near the 45.85. And if that level doesn't hold, then we're essentially looking for this gap to get filled near the 45.20 and also this gap near the 4500. Then for the upside scenario is to watch it to come back up above this 127 extension up at the 4678 and then move up toward the 141 extension or make a new all-time high above the 4746. And for the S&P 500 ETF, the SPY, so the upside scenario for next week is to see would it be able to get back above this 461.53 level here. If we could get back up above that, then we basically are looking for this high volume area to get tagged again at 466.55 then come up to this 459.59, and then possibly up at the new all-time high. So we're essentially watching this sort of a basic price move possible for the upside scenario. Then for the downside, essentially come down and check this 456.97. If that doesn't hold, then we expect to see this 453. And if that 453 doesn't hold, then we'd be looking at these two gaps to possibly get filled down at 451 and 448. And for the NASDAQ 100, the NASDAQ 100 also made it all-time high on Monday and got near this 141 extension, but unable to close with a new all-time closing high. So for next week, the downside scenario, we'll be watching this pivot high here near the 15,701. And if that doesn't hold, then we're essentially looking for this level here at 15,345. Then for the upside scenario is to watch to see would it be able to regain this 127 extension and get back above the 16,445. And if it does, then look for it to make a move toward this 141 extension and possibly for a new all-time high. And for the QQQ, the ETF for the NASDAQ 100, essentially the upside scenario is to watch these level 394.89, 398.97, and if we could get back above these levels, then there's a possibility to see the QQQ make its way back up toward the all-time high. Then for the downside scenario, we're essentially watching for it to come down to this 387.53, and then possibly get down to the 382.78 if the 387.53 doesn't hold, and also possible of getting down to this composite value area, high area near the 380.75. And for the Russell 2000, we see it pull back inside of this balance area. So we expect it to possibly make its way back down to this 2134 area. Basically, we trace back down to the bottom of this balance area. And if it could come back up, then we're essentially looking for this thing to get back above this 2360. And if it could get back above this 2360, then we'd be watching for a move toward the all-time high. So for the Russell 2000 ETF, the IWM, we're basically watching the downside move to possibly come down to this 214.45 level. And the upside scenario is come back up to this 229.67 and possibly make it up to this 232. And for the Dow Jones Transportation, it is still holding above this 16,170 level, essentially this pivot high here. So right now, the upside scenario is to see would it be able to hold above this 16,170 and possibly make itself back up toward this closing high at 17,039. And if it doesn't, and it continue to come down, then we're essentially looking for this 15,899 as the next potential level of support. And eventually we'll be watching for it to dip below this 15,500 and possibly get down to this 15,346 if this level up here near the 15,900 doesn't hold. And the Dow Jones Industrial also came back into this balance area. So for the downside scenario, we're essentially watching for it to retrace back down to the bottom of this balance area near the 33,800. Now, if it could get back above this 35,150 level, essentially getting back above the balance area, then look for this gap fill here and make its way back up toward the 35,625. And for the New York Stock Exchange Composite Index, which is a broad market index, we see it also came down to this balance area here. So once again, we're essentially looking for a downside possibility of retracing back down to the bottom of this balance area, somewhere around this 16,094. Now, if we could get back above this balance area, get it back above 16,708, then keep an eye on this 16,932 level. Now let's go and take a look at the 10-year yield, the US dollar, oil, silver, and gold. On this 10-year yield chart, we're seeing the 10-year yield drop 0.163% to 1.482% on Friday. Market appear to believe the Fed will not raise rates soon due to the new COVID-19 variant. I believe it will resume back toward this level and get back up toward the 1.765 level once the market participant realizes COVID-19 is going to be with us for a few years and the various variant will come and we'll learn to live with it just like we are living with the flu. And as the yield fall, the dollar also dropped, and it dropped to 96.1 on Friday here. And right now we're basically watching to see would it be able to find support if it continues to drop at this 95.7 level. But we'll continue to watch for the upside move toward this 97.79. Oil took a huge dive on Friday. It dropped more than $10 a barrel. This is mostly due to reaction from the COVID-19 news. So if oil continue to move down, then watch for this 64 level to see would it be able to find support here. But if it reverses back up, then look for this, somewhere around this 74 and this 77 level here, essentially this price zone. And if we get back above this price zone, then watch for this $85 level. And the silver made a false breakout on this inverted head and shoulder pattern. Right now, it seems like it's coming back down to retest this 22.72 level here. So keep an eye on this level. If it doesn't hold this level, then we could be watching this thing to come down and test this low somewhere near the 2150. And the same thing happened to gold. You can see that it had a failed breakout of this inverted head and shoulder pattern. So right now it's essentially chopping around near this $1,804 level. So if it could get back above the 1804, then we could see it possibly make its move back up to this 1846 area. But if it failed to hold this 1804 and dip below this price zone, then keep an eye on this 1630 level. Now finally, let's take a look at this E-mini S&P 500 Future, the ES. On this market profile chart, remember last week we said there is another new high for the S&P 500 because there was an outstanding Globex all-time high from the ES. And we saw that new high made on Monday here. Right? It was made on Monday here, this new high. But also notice on Monday, this ES made a poor high, and this poor high indicate the auction was incomplete. Therefore, we will likely see the price to come back up to this level and complete the auction. And when that occurs, we will likely see another new high for the ES and also the S&P 500. So another thing that we discussed in last week's video was the potential of a bull trap to trap the dip buyer. And when that trap snaps, we say we'll likely see the ES to move down and resolve a lot of these unfinished business down here and drag it down to 4,600. And as you can see on Friday, it came down and tagged this 4,600 level. It went a little bit lower than the 4,600 and settled at 4,579. So for the coming week, we're going to continue to watch to see will the ES continue to move down and clean up some additional unfinished business below. And if it does, then we could see this ES possibly come down to this 4,500 area. But the takeaway is be prepared for further downside, but do not be suckered into believing this is the big correction or a new bear market, as the poor high that I mentioned earlier is alerting us to look for another possible new high from the S&P 500. But this new high doesn't necessarily mean to buy the dip for all stocks. So in summary, the market participants are getting somewhat fearful, but are not panicking yet. The internals are showing major weakness and broad market participation on the downside. So be prepared for more downside and followed by a possible bounce to a new high by the S&P 500. So click the subscribe if you are new or have not subscribed to this channel, and be sure to smash the thumbs up to help me promote and share this video. Thank you for watching and stay safe.